So, what is going on, everybody? Welcome to another live stream today, answering the question that all of you guys have been asking me publicly. Why is the stock market collapsing? Now, before we answer that question, I want to first go through just some of the highlights of what we have experienced today alone. And this, again, for those of you guys that are watching this with me, we are live here on the 5th of August at approximately 12:35 p.m. Eastern Time, 9:36 a.m. Pacific Standard Time, if you're with me right now. Japan saw the worst day in their stock market's history since 1987. South Korea saw the worst day in their stock market history since 2008. The Dow dropped over 800 points, actually almost to 1,000 points. The NASDAQ has hit over 3% correction, actually hit and tapped a 4% correction just today alone. Bitcoin smashed through 50K, hit the 40s for the first time in quite some time. Ethereum fell down below $2,200 a coin. That was over a 22% correction in just one day. The entire market was shattered today. Regardless of what you own, I don't care if it's gold, I don't care if it's silver, certainly less than the rest. Stocks, crypto, the market is bleeding. And that brings me to the topic of today's live stream. Again, share this stream with your family and your friends. We're talking about the question, why is the market collapsing? Now, for those of you guys that have me on Facebook, you know how it is with passwords. I don't know which browser I have my Facebook on. Let me try this one. Oops, let's go to Facebook. If I go to my profile, I want to first pull up, if this will load, right here. Hopefully you guys can see this. What is going on in the markets? Hopefully you guys can see that okay. So I'm going to go through this post, but in video format with some extra context so you guys really understand what the hell's happening. Put a 111 in the chat if you've asked yourself that question in the last 24 hours. What the hell is happening in the markets? I'll tell you what's happening. Last week we saw a surprise rate hike out of Japan. Now, for those of you guys that don't know, Japan has held their rates historically low for many years, going before COVID. And so their interest rates have been low for a very long period of time. And what that has done is slowly but surely enticed investors from outside of Japan to be interested in investing or rather borrowing money from them so that they can invest it elsewhere. Remember what I just said, because that's the tip of the iceberg. So they've kept these rates low for years, which is allowing investors from foreign countries like the United States, for example, to go to Japan and borrow at extremely low rates. It's cheap money. It allows them to borrow this money with an extremely low rate of interest. Now, they borrow that in terms of a yen. And then what they do is they bring it to wherever they are at. Say in the U.S., they bring it over here to the U.S. and they buy U.S. bonds, treasury bills, treasuries. And when they do that, they convert the currency, they buy it, life is good. At least, pause. That's how it is supposed to be. Now, why do I say that's how it's supposed to be? It's because this is known as a carry trade, and it works only when and only if the rate of return where you're investing remains good and high, and the rate of borrowing, aka in Japan, remains good and low, except for there's a kicker. Japan, with these low rates, faced two glaring issues. Number one, higher inflation was happening since rates were lower. You guys remember what happened in the U.S. when we reduced rates, right? Inflation starts to go up and up and up because people are able to borrow money. And when they're able to borrow money, what happens? They're able to go spend it, which creates more money. But number two, and probably the more challenging, because rates were low, the yen became very, very weak. For those of you guys that didn't see this, prior to what just happened, this is the value of the dollar versus the yen. Now, ignore my position short right now. What's more important is, look at this. You see what happened? That is the dollar gaining value over the yen. Not just since January of 2023, but how about 22, 21? We haven't seen this upside stop since the start of COVID, basically, in 2020. Every single month, I can go to the weekly time frame. What did we see happen? We saw the value of the yen get weaker and weaker and weaker against the dollar. When this chart goes up, it means the dollar is getting stronger against the yen. Now, why do I bring that up? And what's the challenge with that? Well, with a country like Japan that imports majority of their goods, when you're importing something, there's a challenge. Because rates were low, I'll highlight where I'm at so you guys can follow along. Because rates were low, it made the yen extremely weak, which made importing food and goods very expensive in the country that relies heavily on imports. And so the BOJ had to make a choice. The Bank of Japan. They had to make a choice. What was the choice they had to make? They had to decide, do we A, continue going down the path we're going down and basically get pummeled into oblivion? Or B, do we start to raise rates, making it domestically a little bit more difficult for our country because it's going to spur a slowdown in inflation, but stopping the rest of the bleeding? And that's what they did. What they did is they raised rates. And when they raised rates, what happened to the value of the yen? The value of the yen absolutely skyrocketed. This is the value of the yen, by the way. Just the yen alone. Look at this. Skyrocketed. Now, why do I bring that up? Because when the value of the yen skyrockets, what happens against the dollar? You see that percentage? The dollar, in just the last week alone, has lost over 10% of its value in yen terms against the yen. Now, why is that important? Well, let's go back to the beginning when we talked about this carry trade. All of those, what we call foreign investors, but those of us in the U.S., that's us. All of these foreign investors going over to Japan, borrowing money at an extremely low rate, bringing it to the U.S., converting it via a carry trade, and investing it into treasuries. That's fine. There's an arbitrage there between the borrowing rate and the yield. If you're borrowing it at 2% and you're yielding 5%, that's a phenomenal business. Except for here's the kicker. What if in 1 week, for you to convert it back into the yen and pay down that debt, that conversion is going to cost you 10% more? Most of these investments didn't even make 10% a year. They made 4% because they were in treasuries, or 5%. And so what happened at this point in time? Think about it for a minute. Panic starts to ensue. It puts the borrowers in a terrible spot, which is right now. With higher loan amounts and interest rates, they are now forced to sell these foreign assets to cover the newfound cost because of this massive conversion. And this creates what's called a liquidity cascade. What does that mean? A liquidation cascade. Very simply put, guys, what this means is they then have to go sell their bonds, they have to sell their stocks, they have to sell their gold, they have to sell their crypto, they have to sell. And it's like there's a bunch of people trying to exit, yet there's still not enough exits. And in doing this, this has caused a global market sell-off because there was this infinite money glitch that had been taken advantage of by countries for years, borrowing money extremely cheap in Japan, moving it over, investing it into fixed assets or very stable assets in the U.S. or anywhere else, let's face it, and doing it over and over and over and over and over again for years until, guess what? The piggy bank of Japan, it just shut its doors. It said, no more for you. We're raising rates. And because we're raising rates, guess what's going to happen to the value of our currency? It's going to skyrocket, which is going to make it more expensive for you. You're going to stop doing this. And secondly, now you have a choice. And here's where it gets dangerous. Is the U.S. going to reduce rates in the next 90 days? I'll share with you. Is the U.S. going to reduce rates in the next 90 days? Right now, our probability stands at 100%. We have a 15.5% chance that we reduce rates by 25 basis points, which is 0.25%. And we have an 85% chance that we reduce by 50 basis points, which is 0.5%. Now, if you've got rates going up in Japan and rates going down in the U.S., guess what just happened? It makes this even worse, which accelerates the exodus that you're currently seeing in the markets. The VIX saw one of the largest spikes it had ever seen in history. It went to the third highest level in history. This is the Fear and Greed Index. The only two other times that it's ever been higher was the Great Recession of 2008 and the collapse of COVID of 2020. And so that brings us to today. Now you know why this has collapsed, but the more difficult question that I'm sure a lot of you guys are asking is, what do I do with this information? How do I make this happen? What should I do? Well,